Morning, everyone. I'm Steve Parsons, CEO of Goldsource Mines. Thank you for joining us today. The goal here today, obviously, quick 10 minutes, introduce you to Goldsource, and two key points that I'd like you to take away is one, as a company, we're focused on multi-million ounce deposits, and importantly, really importantly, there needs to be a precondition for scalability. Scale into the asset, scale into production, scale into the CapEx, and scale into the risk. These are the features that typically result in better delivery than a lot of these sort of go big type projects we're seeing today. Secondly, we will show you that our project Eagle Mountain, it is multi-million ounces, it's large, it's in a big district, and we can scale into production, and we've demonstrated that with the PEA that came out last week. So overall, tangible opportunities to surface value, both in demonstrating we're in a district and also in demonstrating the strong economics of this project. So we do have forward-looking statements. There's a lot of them. They are not AI generated. They were actually generated by our lawyer, but probably more forward-looking statements than Pfizer, I would say, at this point. Okay, so who are we? We are a single asset explorer, advanced stage explorer. We're focused on the 100% owned Eagle Mountain project in Guyana. The project is already quite large, 1.8 million ounces. We think we have the potential for resource growth along two key structures, a north-south and the main northeast. And importantly, there's two key features of this deposit that cater to scalability. One, it's really shallow. The saprolite shallow, which you can see here, it's very soft, and the underlying fresh rock very shallow. We've got a horizontal, sub-horizontal zones that are stacked that extend from surface to depth. Okay. The second point is this saprolite, we've got about 500,000 ounces at surface, which is very soft, very weathered. No drilling, no blasting, you can free dig. So you put these 2 points together, what you get is a deposit where you can start where you want to with respect to mining schedule. You put the excavator on this flat-lying deposit and you schedule the high grade, the high margin early. And then point two is you're into the saprolite, so it's lower CapEx, lower OpEx intensity. And ideally, these things translate to lower OpEx and lower CapEx, which for us, we've been able to contextualize that for investors through this PEA last week, which came out, and we'll be able to showcase that later in this presentation. So we're in Guyana, South America, not to be confused with Ghana. Some people sometimes get confused by that. It's a pro-mining jurisdiction. The government is very, very supportive. The permitting regime or the permitting framework is solid, and it's relatively quick. Vis-a-vis other jurisdictions, the agencies are fluent in mining, they're fluent in the technology, and they permitted projects really between 15 to 17 months type thing. So very quick. The skill sets are developed in the country. The technical skill sets are developed. I wouldn't say for underground mining, but really specific to open pit and shallow open pits, which is good for us because that's what we have. As far as our location in Guyana, we're 270 kilometers southwest of the capital. And we're 7 kilometers south of a town called Madia. Madia is a mining town, 3,500 people. There are skills there as well. There's schools, hospital, mechanic shops, all the things you'd like to have for a mining community. But importantly, the project is road accessible. We're not taking helicopters. We're not running barges up rivers. We're road accessible. And key here is the first 109 kilometers are paved. The government is paving the next 122 kilometers or 121 kilometers right now. And that's one of the several major infrastructure projects happening in Guyana right now. So we're going to have a paved road really all the way with the exception of 40 kilometers, which continues to be, dirt road. So that's fine. So definitely a good thing for the project going forward. Looking at the geology of the region and the geology of locally at the project level, the geology of the region, you can see these red dots represent gold showings in alluvials and saprolite. And there's substantial, particularly in and around where we're located. We're in this green box. I don't know if you can see it, this green box right there in the center of the screen. That's our prospecting license. These gold showings all around us, not only to the north and to the east, but very substantial. It's a significant district. Looking more at the western side of our green box, that's the figure on the right. And you can see the gold showings there just on our property. There's about 7 kilometers of auriferous gold showings on a northeast structure and a north-south structure. The red dots are gold showings over 1 gram. The orange dots are not gold showings, but gold drilled in holes. The orange dots are over 5.5 grams per ton. So clearly a lot of gold on our property and regionally. And then the satellite image is great because it shows, our prospecting license in this case is the yellow dashed line. Significant large artisanal miners all around us, in and around Madia, specifically off our northeast corner. You can see that photograph in the bottom right. These are super artisanal. So we're very much in a district. As I said, we're looking for multi-million ounce district-style deposits. Our deposit, the Eagle Mountain, so it's 100% owned. It's defined in this pink outline here. There's, as we've shown right here, one major sort of subhorizontal, very shallow surface expression of the Eagle Mountain deposit. Then we've got a sequence of deposits along a north-south structure, almost like a string of pearls. So the main Eagle Mountain deposit, that hosts 1.6 of the 1.8 million ounces, very shallow. It is a stacked mineralized system hosted within granite diorite. It's an intrusion-related deposit. If you're looking at the deposits along the north-south trend, from the north to the south, these sort of string of deposits, they're intrusion-hosted deposits where you've got the mineralization at the contact of a volcanic structure and of a diorite intrusion. They're typically about 40% higher grade than the main Eagle Mountain deposit, and they're vertical, not subhorizontal. They only represent about 11% of the resource, but nice supplemental feed for the mill. Just looking at 3D image of the resource, you can see it's very shallow. It's a blanket of mineralization across the side of a hill. In the main Eagle Mountain deposit on the right, on the left, they're the smaller vertical deposits, but higher grade. The saprolite component, which is at free dig, very soft, on average, it's about 17 meters of the top, surface expression, and represents about 30% of the resource. So moving on, just really quick summary of that resource. We've already been through the size of it. It was defined by a lot of drilling. Overall, 772 core holes, about 75,000 meters, very shallow drilling. That's consistent with our approach of shallow executable. The average drilling depth was only 98 meters. So a lot, still, potential to depth, we believe, but we've been focusing on the surface expression here. So onto the PEA. This is the real story. This is, kind of fresh off the press last week. Our PEA is based on a conceptual open pit plan, low strip, 5,000 ton a day, CIL gold processing plant. We phased the development, and part of it is we want to execute on this project. So to phase it, we're 4.5 years in that saprolite, and then we move into that fifth year into the fresh rock, which is harder, and we have additional capex in phase 2. Overall, the after-tax IRR 57%, the after-tax NPV 5%, 292 million, 18-month payback on phase 1. And the gold production is over 15 years, and it's modest. It's 70,000 ounces a year, but it's over 15 years. The all-in sustaining costs are estimated to be $829 an ounce in phase 1, which is the saprolite. You're free digging, no drilling, no blasting, light power intensity in the mill. Over the life of the mine, we're looking at an all-in sustaining cost of $1,077 an ounce, as estimated in the PEA. If you ran the sensitivities at all kinds of different gold prices, even down to 1,650 gold across 15 years. And even with that, we see an after-tax IRR of 47%. So robust project, that's one of the things I wanted to highlight. And what we did here too with phase 1 and the timing of phase 2 rather, is we staged it such that we projected a cash flow from phase 1 such that we'd be able to pay back phase 1 capex, accrue significant cash to the balance sheet, surplus cash, and then time to phase 2 capex spend of 46 million in about year 5. We'd estimate surplus cash at that time. So it's fully funded on phase 2 based on our estimates in the PEA. That's the layout. I'm going to go through that quick. It's a pretty tight layout. The phase 1 capex is 96 million. That's got an 18-month payback. I mentioned the phase 2 capex already. And we'll just move through this. As far as the timing of the phase 2, we talked about that, but really was the concept was to make sure we can easily fund phase 2. So as far as the timing goes, with the fluency and the pro mining framework in Guyana and our style of project, particularly phase 1, where you can get into quick and you can build it quick, we're moving to get this project shovel ready. That's one of the objectives. And to do that, we will put out our environmental authorizations. We'll work through that this year, put in our applications. And the key here is, and ideally, we'd like to be shovel ready and have our permits in place for phase 1 by earliest late 2015. So as far as the shares have gone up, because like a lot of juniors, we've been under pressure. We've got a 15 million market cap, pretty incredible relative to our NPV. and sort of the executable ounces. We trade at about $7 per ounce on that 1.8 million ounces. We trade about $10 per ounce on the PEA ounces, which are those sort of executable ounces we talk about in the PEA. Don't have time to go through the team, but it's a really well-known team. Swing by the booth and we'll walk you through who's on it. But team is very well known in Guyana, very well known for phase development strategies and building high-quality projects.